Welcome to the Daily Business and Finance Show. Lockheed Martin increases dividend, Israel-Hamas war threatens Saudi relations, tech's ambitions in sports, Birkenstock goes public after Barbie cameo, luxury supercycle nearing its end, Novo Nordisk lawsuit dismissed, Phillips 66 declares dividend, cryptocurrency fundraising hits 3-year low. Stay tuned after the short ad break to learn more. Lockheed Martin, the aerospace and defense company, has recently declared a 5% rise in its quarterly dividend to $3.15 per share. The forward yield is currently at 3.14%. Furthermore, the company's board has granted approval for the repurchase of up to $6 billion worth of Lockheed Martin common stock, thereby increasing the total authorization for future purchases to $13 billion.
The recent conflict between Israel and Palestinians in Gaza has likely hindered the prospects of establishing normalized relations between Israel and Saudi Arabia, potentially affecting financial markets. Israeli Prime Minister Netanyahu initiated hostilities against Hamas following clashes at the border. The possibility of a Saudi-Israel agreement, which might have entailed an increase in oil production, now appears doubtful due to this attack. Consequently, when trading resumes on Monday, there could be a rise in crude oil prices.
Traditional media companies like Disney and Warner Bros. Discovery are losing their grip on live sports as tech giants such as Apple, Google, and Amazon pour significant investments into acquiring broadcasting rights. The rise of cord-cutting and the increasing competition from streaming services have significantly weakened the position of traditional media in this domain. Notably, Apple and Amazon are currently engaged in discussions to stream college football playoff games, while Google has recently secured the rights to NFL Sunday Ticket. Additionally, Apple is contemplating a bid for global broadcasting rights for Formula One races. These tech companies are aggressively pursuing live sports content with the aim of attracting more subscribers to their respective streaming platforms.
German premium footwear brand Birkenstock is preparing to go public with its initial public offering this week. The company aims to achieve a valuation of up to $9.2 billion, positioning itself as the third largest company in the footwear sector based on market capitalization, trailing behind Nike and Decker Outdoors. Birkenstock plans to offer approximately 32.3 million shares during the IPO, with a target price range set between $44 and $49 per share. The brand's popularity has surged following the inclusion of its sandals in a Barbie movie. Additionally, Birkenstock has expanded its product line to include clogs and boots. Despite concerns surrounding consumer spending on non-essential items like footwear, Birkenstock intends to utilize the proceeds from the IPO to reduce debt and invest in growth initiatives.
Luxury goods makers may encounter challenges in the near future as the luxury supercycle, which has propelled their stock prices, appears to be reaching its conclusion. BMO advises investors to exercise caution due to several factors including reduced disposable incomes, higher interest rates, and a difficult macroeconomic situation in China. Out of all luxury stocks, only 3 are listed as outperforming: LVMH, Moët Hennessy, Kering, and company financier Richemont SA. Nike and Puma are the sole sporting goods brands with a positive rating. BMO predicts a slowdown in revenue growth trends and emphasizes the decline in aspirational consumers. Historical data shows that luxury downturns typically last for 4 quarters with an average 12% decrease in share prices. Additionally, macro headwinds are also impacting consumer spending power.
A Florida judge has dismissed Novo Nordisk's lawsuit against a compounding pharmacy accused of selling unauthorized versions of semaglutide, their weight loss therapy. Nevertheless, the judge has granted Novo Nordisk permission to submit an amended lawsuit, ensuring that the case remains active. This ruling is in line with previous legal actions taken by Eli Lilly against compounding pharmacies for distributing unapproved versions of their diabetes therapy.
Phillips 66, an energy company, recently declared a quarterly dividend of $1.50 per share. This payout is in line with their previous dividends and offers a forward yield of 3.85%. Shareholders who are recorded as such on November 17 will receive the dividend on December 1. Despite the challenges faced by refining stocks due to shrinking margins, Phillips 66 continues to exhibit strength in the market.
In the third quarter, fundraising in the cryptocurrency space reached a 3-year low. Crypto-focused firms managed to raise just under $2.1 billion across 297 deals, marking a 36% decrease from the previous quarter and the lowest amount since the fourth quarter of 2020. This decline can be attributed to multiple factors, including the collapse of the Terra ecosystem and an overall industry downturn. Notably, major digital tokens like Bitcoin and Ethereum also experienced losses during this period. Despite these challenges, early-stage projects received a significant portion of funding. Seed funding accounted for $488 million across 98 rounds. Interestingly, Binance Labs emerged as the most active investor despite facing regulatory issues.
Thank you for joining us on today's episode of the Daily Business and Finance Show. Stay tuned for more insightful news and analysis. Until next time, I'm Montgomery Jones.
And I'm Amalia Dupre. Farewell until tomorrow. Have a good one wherever you are. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.